Hey everybody, this is Jim at SP500chart.com. It is Sunday, early evening, January 3rd, 2016, and we're going to take a look at the last week of trading in 2015. And just for the heck of it, we'll look at the whole year, just in a very brief overview. But before we do anything, I need to remind you, as always, that the website and this video are for educational purposes only, and nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's start out with what happened over the week. All right, here's your week right here. Starting on Monday the 28th, running through Thursday, another short week. And guys, it just looks like we encountered a little bit of selling pressure here at the end of the year. You know, maybe that's not so unusual. To be honest with you, I've talked about how there are times when you see selling take place on a Friday, and sometimes you look at it and you say, well, you know, traders may be a little skittish, maybe wanting to take some profits, maybe not wanting to hold over the weekend. Well, you know, when you come up to the end of the year, you've got all kinds of reasons why people may or may not want to buy or sell. And what we saw late on Friday was just a little bit of selling pressure that took us underneath my proposed possible support line. You see, we tagged this line early on on Thursday. I'm going to say Friday throughout this whole video, okay? Forgive me, every time you hear me say Friday, I mean Thursday. So, Thursday, we come down to this line and we bounce, and it looks like, wow, that was a genius move, just putting this line up there for the sole reason that it was parallel to our top line, and it lined up. Actually, we had it here to start with, but I moved it to here. And it's interesting to note that both of these lines look like they sort of made sense, you know, because we bounced on that initially on Wednesday late, then we broke through it, and but now I'm scooting this line down here because it lines up nicely with that bounce. Even though we are trading underneath that line by just a bit, I want to see what happens tomorrow, because like I said, coming in at the end of the year, you got people who just might, you know, they might want to be taking some profits, or maybe they're just kind of scared. I don't know. And of course, you've got the ever-present issue of people wanting to take a tax loss, and that was their last chance to do it. I used to think for some reason that the tax loss would take place on the settlement date, but it's not. It is the trade date. So maybe that's why we saw that little bit of weakness there at the end of the day, when it looked like, well, maybe things weren't going quite so swimmingly well here on the last trading day. You know, count me out. I'm going to take some losses or gains, depending upon which side you might be on. So guys, that does not really bother me that much. We are also now back underneath our resistance line right here, and you can see that we got under that immediately right as the markets opened on Friday, and then we bounced here, and then we came approximately back up to that line, and then we started back down again. Last trading day of 2015, I'm just not that concerned about that. I want to see what happens this next week, because we still have this double dip thing right here that tells us we should be making it up to 21 to the high 2180s. Just for jollies, what if we took this resistance line right here and made a parallel to that and lined it up here? Well, boy howdy, isn't it funny how that seems to work out? I'm going to get rid of this line. Maybe what we're seeing, as I've mentioned before, maybe we're seeing a larger channel that's being developed here, with this being the longer term resistance line. What color can I make that? That's not much on this chart. There's so much on this chart. I'm going to make it a bright green, and then this one down here will do the same with that. So just maybe this is a channel that we are now in. In order for me to feel good about that, however, we've got to get up over these two resistance lines right here. We've got to get up from where we are now, and we've got to break through to make an attempt to come back up to this top line right here. You see, we have a touch, a touch, a touch, two touches, maybe a third in the making. But this does look sort of like a this does look to my eye a little bit like a reversal here that we should be headed up fairly soon. So as the week went, like I said, we were down a little bit for the week. Not terribly bothersome. I don't like the fact that we did not get support at this neckline from our potential inverted head and shoulders kind of a pattern right here. No big deal. Like I said, last trading day of the year, there are forces at work in that last day that are not typical. So I want to see what happens the first week of trading in 2016. Now, I said we were going to take a look at things as it exists for the entire year, and yes, we're going to do that right as soon as I get that year into focus. There's our year. We started in January at about 2060 or so, and we ended in the end of December at 2043. In other words, the S&P 500 lost about 0.7 to 0.8% as the year goes. But if we back out and look at this on an even longer term chart, if this channel holds up, then 2016 could be a year in which we break out of this area if we can get over these areas of resistance here and potentially come back to test this line up here that could even take us into the mid 2000s by the end of the year if this bull run still has some steam in it. And based upon this chart, I don't see any reason to say it couldn't happen. As a matter of fact, based upon this chart, if we can break through this line, I think instead we can say we have some reasons to expect it to happen. But until I'm saying that a lot now because everything it seems in this chart is somewhat conditional. If we break through this line here, and I think we should, because remember we got 2188 sitting up here that seems to be calling out to us. If we break out over this line right here, then we should be set up for a move to just under 2400. So guys, I think that's about it. That's kind of your year in review. It was a bunch of sideways, double dip, and now more sideways. If we can get over this line right here, then we should start a new leg up to set all-time highs. And I do not think we will get over this line right here. But if we can make it up through this, really I think our toughest nut to crack here is just getting over that 2130, 2135, 34 mark. If we can do that, then I think we're in darn good shape for this market to surprise the bears once again. So guys, I think that's all I've really got to say here. Let's see if we recover from that little late day dip, because you can see that took place really in the last about the last 6 minutes of trading. Okay, that little red candle right there, if we'd just been right here, I would have gone that's nothing. But this little dip right here seems to be that little bit of maybe late year jitters, people wanting to lock in some tax losses. Another thing you might notice that's kind of interesting here is that gap resistance right here. We had that little gap down. We got right back to that gap area, and that's where the high of the day was. And we've talked about why that is. I won't bore you with it again. But again, I think this last day of the year, probably everyone had a little bit of a heightened sense about some people wanted to get out of the market. And for whatever reason it was. Probably tax planning purposes. So, guys, there's your video for the last week of trading in 2015. Let's see how 2016 kicks off tomorrow. And thank you for being with me throughout 2015, or if you're new through whenever you came on board. I hope you'll stick with me through 2016. I think I'm pretty confident in saying that the market is going to move about at least 15% up or 15% down this year. I don't think we're going to look at things in a year from now and say we just went sideways. I do not believe that's going to be the case. We are either going to rally and we're going to head up for the mid 2000s, or our double bottom pattern is going to fail and we break through some support and we end up in the 1600s, which could even be as much as an 18 to 20% loss for the year. The setup is there. We either go up nicely or we go down. If you can say nicely, well, if you're short, I guess that would be nice. So look, guys, thanks again for watching. Take care.